Now, one thing I want to express overall is the simplicity of Forex. At no point should any of you be learning and getting better at Forex and your chart is becoming much more confusing. That means you're doing it wrong. If you take a notice to the untrained eye, all I did just now was draw 1, 2, 3, 4 lines. That's not what I did. Let me cut off all of this information quickly and show you what happened. Upon market price making this downward move, I immediately drew up 1, 2, 3 lines initially, yeah, to say that if the market price was going to go back to the bullish side, I'm on the M1 chart, by the way, I had to see each wick get taken out. These wicks represent deviation areas. Simply put, they represent areas on the chart where the bulls failed to overcome the bears. As you can see, the bear sent the market price down to the bearish side with a decent impulsive move. I'm on goal, so even though we're on the M1 chart, a move as small as this still reacting almost 20 pips. This was 19 pips down. All right. Now take a look at our market price upon reaching the low. So many of the sellers would have undoubtedly did what? They would have collected some profit, right? And upon collecting said profit, we saw market price make the first initial wave up. Tested back this zone, came. Now right here, so would have been my entry. Because as you can see, the low is being respected. And now upon this initial structural high being made, here comes the bear candle. And then we saw these two pin bars start to come now to overtake this bear candle. So right there, so that would have been my entry. My stop loss would have been here. My entry initially would be 0.01 because I'm testing the waters, right? Our market price started to give me confirmation by breaking past the deviation lines that I already had early. Now, if price had come all the way up to the top and I taken out this zone, it would have been further confirmation to me that my uptrend is continuing. But that didn't happen. It went right back to the same liquidity zone where there's buy side liquidity right here. And then we start come back down. Now let's examine this further in tandem. First wave down, risk one entry. That's what took place. This is the first wave. As you can see, the market makers then stepped in upon the first wave. Price then reached a current exhaustion on the first wave. Many persons took profit. We entered back into the deviation zones. All of a sudden, we saw a choppy look pullback. Right? Now, notice, this would have been the high the price made, HH, right? Upon market price pulling back and taking out roughly, I'll back out the Fibonacci for this section quickly. Price came and took out 50% of that initial move. More than 50% of the initial move, right? If you can look good, right to say is where the equilibrium area is. I'm gonna kind of pull it cross so you can see. So see, above 50% equilibrium, all right? On that initial impulsive move. Now, price did something that would have given me what I call a justification entry. As much as how the price is bouncing about, remember, I would have quickly drawn this line. Price is failing to take out this high. Plus, I'm seeing evidence of a continuation of a sell-off. So let's say I took my sell after I done collect my initial buy. 0.01. And I put my stop loss roughly what, 5 to 10 pips away because I'm testing out the waters. My confirmation that the market price is heading down, I would have to still see these previous zones get rebroken. If it breaks my floor, whoa, I'm going deeper in profit. Take a look. Now, the reason I'm doing this zigzag is because to a young retail trader, his psychology is not at this level to see the market price pull back so often. In his mind, it can easily go against him at any point. That's not what's happening. Each time the market price dipped, many of the short-term sellers collected their investment, and then market price proceeded to pull back and created the opportunities for more sellers to jump in. So each time the price pulled back, it was actually attracting more sellers. Because if you look closely at this level, you would quickly realize, yeah, the previous highs were being what? Respected. Now, a master Forex trader who see this, him sell multiple times. Because you already understand this is a runaway trade at this point. The market is clearly showing me that each pullback was to attract more sellers. So all them stop losses, them up here, so him enter, bear sell, 1, 2, 3, 4, 5 sell pan goal. Psychology calm as a cucumber. Now, I'm glad this is happening in real time while we're doing this session. Take a look. My floor earlier, that the market price didn't break, upon going back up to where buy-side liquidity was taken out and attracting more sellers, on this next attempt, I wouldn't call it the third attempt, or fourth, but let's say on this next attempt, so we only have focus on the zone here, yeah. We saw asset price now come down strongly. Confirmation to somebody who is deep in profit to continue to hold on to their sell. The moment you saw this floor get broken, you would have been on your way. But before it happened, let's examine this area further. Let's zoom in on this area. Notice first and foremost the initial touch. This was a low. So we saw a little bit of buy reaction because buyers were here. We saw the same time earlier when price touched this area, or the asset price made a bullish move. Take a look. So touch this low. Who got trapped right here, so? This is sell side liquidity. Sellers, or should I say retail sellers, went in and sold at the bottom of an already impulsive bear move. So the market maker then went, send the price right back up above the initial low. Yeah. Tricking many of them to say, oh shoot, it's time to buy. They went and end up buying inside of a what? Bearish order flow. Because there was absolutely no setup to say that the asset price was going back bullish. You have not seen a setup like this. If it was a setup that was going to say the asset price was going to go bullish, you should have seen bull candles stay above this line. You didn't see that happen. And as such, those who bought here, their stop losses would have been in this vicinity. Market maker came through and raid their stops and I sent the price lower. Now that they have gotten stopped out, in typical retail trader fashion, the next floor, they would have then gotten so frustrated and would have chased this bear candle further into the sell side liquidity. And then with just one candlestick, the market maker took them out. So they've gone how much more? 3 losses, or well, 2 losses now, right? As it stands at this present moment, is there a setup right now in real time that says that the market price is ready for a buy-off? No. There is no setup right now. We have to see first and foremost the low get respected. All right, I'm going to judge it from a different angle. We have to see first and foremost the low get respected. And then the previous areas on the chart, I'm going to use a different color. What is this? You can't take this color now. Where the bulls undoubtedly failed earlier. They know, by the way, we're in dead market hours right now. It's now 9:50 New York time. So by right, under normal circumstances, we will be trading, but I goal this, so I steal money. If we were to count the entire pip move, oh yeah, so man, decent 34 pips right there. Take a look now. This is confirmation style trading. Preparing you for a potential A, continuation of the sell-off, or B, opportunity to catch a buy. Now, asset price has dipped further below. And we now have our floor at what? 1649.92. Right now, first wave of buyers get knocked, so we're seeing what? A retest of that floor. So smart money traders are currently eyeing up this year right now. Retail sellers, retail traders, I should say, are selling at the bottom and are constantly getting stopped out. Now, here comes the opportunity of a potential price action setup. Give me a second. Let me pull across this line and make it bold because it's going to be significant. Our office price do what? Overcome this area. Because this would have been the initial structural high from the buy point, right? And then it came back down, stopping out these guys that entered. So 3 minutes worth of buying opportunity, he just use 2 candlesticks and wipe out all of that. But after this floor get respected, and then we need to see after a strong push up, we need to see candlestick stay above this line. You probably said, Darian, why above this line? This was where we had our last major bullish price action activity. So that zone is very important. I'll explain later on in other lessons and so on. Now, take a look. Price is dipping further. There was a time, I must confess, upon seeing it like this, I would have gotten frustrated and said, sure, it's still a sell. Some of them sell at the bottom. Man, was I foolish at that time. This right now can be one of 2 things. The market price is setting up an inducement to entice more retail traders to continue to sell at the low before it does this big shoot up. Let's back out the time formula. All right. We're nowhere close. The Asian session being ready to be closed. Still have a couple hours left in Asian session. And so an Asian session can come to an end at 10. So I'm going to pull it all the way across the 10 o'clock period. But as it stands right now, I think Wednesday is off to a good start. So this is the entirety of the move so far. And the start of the Asian session all the way till now. So the price has practically wiped out all of those who held on at an intraday level from the previous buy from earlier today. All right, so this is how Wednesday looking so far. All right, now take a look. Asset price has pulled back up now, but still there is no structure. What's going on right now? This is choppy. But you're going to look for a setup that shows you a gradual what? Take away from this zone. Sometimes it can come passive, sometimes it can come aggressive. Now, there's not much liquidity going on right now due to the fact that majority of smart money traders, majority of the guys in from Asia already made money off of this and this. So then done for the night. All right. So all eyes is on London session. But I'm just show you guys this as a kind of warm up to the rest of the week here. Something like this should mess up your brain, right? You should understand that this is the early stages of an impending next move. So in the case that the price is moving like this, understand that this is the trap zone taking place. And you guys who are aspiring to be smart money traders should not be caught up in that trap. Make those who just join Forex this week or follow some bogus course, make them get trap writers and get wiped out. Trust me. Their stop losses is liquidity, and that is going to help you guys later on. You're waiting for after the trap zone and the expansion phase. You're waiting for a true dynamic move that is showing that the price is going to be, in this case, hopefully giving us a bullish pullback. All right. Now, let's get to the heart of the matter. We're going to touch upon the Sunday open, then jump on the liquidity. All right. So I'm going to go upon one of the hot bread assets in the group. GBP, JPY. All right, ready up now. Shouldn't take too long. So, oh yeah, I have to start from the first of the month. My gosh, I have work for do. All right, here we go. First of the month. All right, so right, so it's the official first trading day. So it's 30th. So the 1st of October. Okay, all right, cool. Cool. All right, perfect. So this would have been the first official starting block, Sunday opening range that kick-started the month of October for the asset GBP JPY 2 to 10. All right. So this would have been the 2nd of October, the Sunday. Now, as usual, this is after the fact, so I'm just going to mark out the entire 5-day trading span to show you guys what happened. Now, every single month, every asset establish a high for the month and a low for the month, right? I think we all can agree with that. So Monday, Tuesday, Wednesday in that week, establish the high. Okay? Ever since Wednesday established that high, the entire week, then the rest of the week from Wednesday onward, kept on going lower. So we momentarily stayed above the Sunday opening high, then Wednesday, Thursday, and then ultimately the last trading day in the week, Friday, price then came to an end. All right. Notice how many pips the market price gave us on the open on the first official trading week. So 272 pips to that Sunday open. Is the same thing gonna happen come the next week? Nope. Not gonna happen, as you guys can see right now. So 2 to 10. Notice how I stack my lines for this period. I don't want to cause any confusion, so I'm not dragging over any of the technical confluence data into the next week. That make no sense. I have to keep my chart then clean, especially when I zoom up a higher time frame to see how the trend has progress. That way my psychology is on point. As I say, if your lines them now make no sense, trust me, it's going to show in your trading. So next week, week number 2. All right, so we would have completed the 1 to 7 day opening range. So the Wednesday of the first week is still the highest area. So we're going to see going into week number 2 if all of the gains from the previous week is going to get wiped out. So Sunday opening, pull it cross, 5-day span as you can see. No true break. Never took place till we're into Tuesday, the 11th of October. So right here, so we'd have set the highest here at the time. All right, pull cross. So this is Tuesday, this is now Wednesday now. All right. By time Wednesday came on the scene, became pretty apparent to us that the market price having set the lowest here for the second week. Price then went and took off. Now, as you can see clearly, the second week gave you so far the lowest here for the entire month. That's why when we say, all right, we're going to zoom out on our chart, the chart of it needs so you can quickly gather some data. So the Wednesday of the second week gave you the lowest here for the month. So if that low was made and respected, quite naturally you're going to expect some buy off, right? And the further confirmation to hold on to your buy, I'm speaking to the potential swing traders in the group, is that if you see the previous day's highs being taken out, keep it simple. So price then went and took off. So this now a Thursday. All right. Notice now. Quickly, just a brief touch upon this. We'll do this more in depth in further lesson. Notice how price pull back neatly right here. So and trick so many investors, real retail traders into thinking that the price will go quote unquote sell back again. But notice, even though it pulled back, and did some choppy look move, you're still above your current week Sunday open. And then after he has discounted the price, attracted more buyers, market maker then went through, exploded the price. Some guys catch this one right here, so made enough money for the entire week, then done. Cool. So Thursday continued. Friday practically did the same thing. All right. So this is where the week came to an end. So the week started its bully run from the Wednesday. On the Friday, the market price, for the second week in October ended bullish. So a good substantial amount. Oh, wait. Practically all of the gains, now that I zoom out, you guys can see, all of the gains made from last week was wiped out from Wednesday all the way into Friday. And as you can see, he was very unforgiving on the Friday. He ended the Friday quite choppy. So after a move like this, because this is 48 hours worth of a bull run, So some guys who hold on this on lot one, they would have captured 734 pips. Now that's a lot of money, especially if you enter this at lot one. So in true market maker fashion, after a strong impulsive move, the very next day, you can expect a market shakeout. All right. So Friday come, Friday did this thing. So, mark out the high, keep it basic at this point and low and so on. But we have a strong formula, not true. So 16th of October, repeat the same process. Mark out the highest and lowest area. And you'd have quickly, so this is what we would have done from Sunday, but we never get a chance to do it. I would have quickly jump to the M30 time frame. And you would have marked out for a 5-day span. You just pull it way across, you know, as time go by, you get better and you adjust it accordingly, right? So a 5-day span. Back to the M15 chart now. Now remember, our last week ended bullish, so we're currently still inside of a bullish order flow. And now we're in week number 3, right? So as you can see, you saw a continuation of the overall momentum from Friday all the way into the Sunday opening. Continued all the way on the Monday of this week. Has now set a high. Tuesday came on the scene. Lower high. Went right back to the Sunday opening roof. Got the liquidity that it needed. As you can see, it didn't break it. Just pierced into it. And here we are now, currently, for Wednesday. After a little choppy start, but the buyer still is in fact what? You know, bullish. Now here's where the liquidity comes in, right? I am going to now focus on the last impulsive move that the market price made during Asian session, during US market, for the 18th of October. Shift chart quickly, zoom out. Now, what do I need to do now? Need to identify the liquidity area. So as you can see, this is the highest here I made. Right here says the lowest. So my liquidity under no circumstance can be at the lowest here upon the chart. Don't make no sense. So, and it cannot be at the highest here because that's the area where persons take profit. So right around here, first we have market price pull back right around here and continue the uptrend. So last impulsive move liquidity, this zone right around here, liquidity roof, perfect, that zone. Now shift across the chart, just gonna pull this all the way, just the Asian session. All right, 10. Now, to some of you, all I did was drop 2 lines. Take a good look at what's happening. We saw from it made this pierce right here, so you got a lot of sell-side liquidity, attracted buyers at discount, and as choppy as it be, you realize how the line chart now is exposing the fact that the market price is still trying to push towards the bullish side. What I need to see that is going to confirm to me that the asset price of GBP JPY is going to in fact continue towards the bullish side. I need to see, first and foremost, on my current Asian session, potentially this liquidity zone get respected. Right now, things not looking so up for it. So I'm anticipating by London a pullback. Because why? If my market price is in fact going to continue bullish, I'm going to mark out the liquidity from earlier over here. So, okay, I'm going to give you a different color. If my market price is in fact going to continue bullish, I have to see these levels get broken. Now ask me, I'm telling you. These are going to be my confirmation points. Now, judging by how price is choppy right now, I'm not seeing an entry setup. Drawing all these lines is all nice and fancy, you know, but there's no entry setup. I mean, seriously, let's go psychological right now. You're going to put your money inside of this? What's going on right there? So price is accumulating. But the man them don't know a thing about Forex, go and put in their money. I need to see a stop on take place. Might sound cruel, but that's the truth. I need the retail traders them to get stop hunted. And once they have gotten stop hunted, I know that the real move is coming after that. So I need to see an expansion out of this. So I am not pleased. Let me decide to jump in right there and get stopped out, and my business that. But me know better. Money too hard for come by right now for do something like that. So I have to be smart on the chart. So what do? I wait. Current session is not favorable. I have my confirmation zones, yes, ready. got a couple liquidity areas marked out on my overall potential directional bias from a higher time frame standpoint. It's telling me that my zoom out GJ at this point is what? Bullish. Now, if you take a look, it's not only been bullish from the part of October, it's been bullish from September ending part, right? And it's overall bullish overall. However, I don't want to make that detrimental mistake of buying it while it's at premium, especially when it's at a premium exhaustion point, meaning that, look at the people inside are sending this up there ready to sell it. So I am anticipating that sell-off. And also, this same zone is going to assist me. Market price can come, pinpoint itself in this zone, get what it need. And if I see a repairs of these levels via London session, because this is dead markets right now, I can take an entry. If I come into London session and I still do not see a favorable setup, all eyes is on US market. And that's how it works. Now, there's a lot more to it, but this is just the core basics I'm going through right now. So I hope this assisted you guys. All right. So yes, this model can be used for day trading. And as you guys can see, can also be used for swing trading. All right. But the main point is you have to understand the overall market flow. Those who caught in on the buy in the second week of October, congrats. But those who caught it when it made this strong sell-off in September and caught it down here, wow. They don't have to look back. I mean, they're so deep in profit right now. And those are the type of moves that we should practice to catch. All right. Gonna wrap up now. So any questions? Can mute to the mic. Any questions?
Yeah, Darren. Oh, you hear me?
Come on, right here.
My thing is, you say I could give you the tools to be able to do the setup side, like practice these strategy. Is it a specific tool you have to pay for?
A specific tool you have to pay for? No, man, I have the indicator I can give you. So can be really easily posted in the group right now. But it's better when I get the manual part first. You get me?
Yes, and I say.
Yeah.
Should you say you're gonna give us so that we can practice?
Yeah, man. All right, a simple 1, 2, 3 for send it to no. But you see this now, the theory part now, and the back testing part, the manual technical part, you have to do this and catch this in your muscle. You get me? Because the indicator now, it'll go, what am I saying? It'll go do some of the work for you, but sadly, it not go bill you. You have to get your hands dirty, for lack of a better word. That way you understand what this represents and so on. You get me? And it can help you so much and no further. The information when I go no, later on, and that will really propel you forward. You get me? All right, so I guess that's it. No more questions, right?
Well, Darren, the MT5 thing I asked about, different from the IC markets where I use now, or the same thing.
MT5 is like an upgraded version of the MetaTrader 4 now. But the thing we asked about MT5 for synthetic trading, right? You can get that from Deriv. I think at that Deriv going give, I think I know Deriv of Forex trading as well. But if you can go strictly for the synthetic trading at the MT5, them gonna offer you. You get me?
Okay.
Yeah, man. So when you go up on the site and at that you select, then automatically can push the MT5 for you. You do what you have to do, download it, get your demo account and start practicing and you that. All right?
Cool. Okay, when I create a live account with them, you know, all these when they're funding it still.
All right, no problem. No problem.
Yeah, cool. Thanks.
All right, cool. All right, so okay, let's see now. All right, we'll stop it right there. So, night, bros. Peace.
All right, then, bro. Peace, we.